Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are trying to hide in these massive reports. Let's just say this company's latest filing might have you scratching your head wondering if they're living in the fiscal year 2025 or some alternate reality. Alright, so we're diving into Vera Therapeutics Incorporated's annual report for the year ending the 31st of December 2025. Now, Vera Therapeutics is a biotech company, and like many in this space, they're not exactly churning out profits yet. They are focused on developing treatments for immunological diseases, with their main hope being a drug called Accession aimed at a kidney disease called EGAN. Before we plunge into the nitty-gritty, if you appreciate getting real insights from these dense financial documents, make sure you are subscribed. And hey, we've got a fantastic community over on our Discord, linked in the description below, where we break down more filings and chat about all things corporate finance. Let's jump straight into the financial story. Remember, we're looking at the year ending the 31st of December 2025. What jumps out immediately is that Vera Therapeutics is spending a ton of money on research and development. Their report shows for the year 2025, research and development actually went up by 71% compared to 2024, reaching a massive $215.3 million. That is a huge jump, and it's fueling their drug development efforts, especially for Adacept. And when you bundle up research and development with their general and administrative costs, their total operating expenses skyrocketed by 89% to $315.5 million in 2025. That surge in spending is largely due to growth in headcount and preparing for the potential commercial launch of Adacept, which is a big deal for them. Unsurprisingly, with all this spending, their cash used in operating activities also saw a big increase. For 2025, they used $241.1 million, up significantly from $134.7 million in 2024. This means they are burning through cash to keep the lights on and push their research forward. Now, you might ask, how are they paying for all this? Well, as of the 31st of December 2025, Vera Therapeutics had $714.6 million in cash equivalents and marketable securities. That sounds like a lot, and it is, but compared to their spending, it's clear they will need more money. They actually say their cash should be enough for at least the next 12 months. But they're already planning to raise more capital through stock sales or other financing. Financially speaking, it has been a tough year. Their net loss for 2025 was a staggering $299.6 million. That's almost double the loss they reported in 2024. This is typical for biotech companies in their development stage, but it's a significant number. One bright spot, if you can call it that, is their interest income. It went up by 6% to $15.9 million. This comes from the money they have parked in investments, which is good. It's earning them a little something, but it is a drop in the bucket compared to their losses. They also took on more debt. In June 2025, they entered into a new loan agreement securing up to $500 million, and by the end of the year, they had borrowed $75 million. This debt, while providing much needed funds, does come with restrictions on their operations, which is a common trade-off. Now, let's talk about the risks, and there are a lot of them. The company is really upfront about how dependent they are on the success of Adacept. If it flops in trials or doesn't get approved, their whole business could be in serious trouble. They openly admit they have no products approved for sale, and that makes predicting their future very difficult. This is a huge one for them. They're putting all their eggs in a few baskets, and if those baskets drop, it is game over. They mention that clinical trials are long, expensive, and very uncertain. One key trial for Adacept, Oregon IGN 3, did meet its primary goal of reducing proteinuria, which is a positive sign. They even submitted an application for approval to the FDA in late 2025. But remember, FDA approval is not guaranteed. Getting enough people into these trials is a major challenge. They're competing with other companies for patients, and if they can't find or keep enough participants, their trials could be delayed or even stopped. This is a common hurdle for drug developers, but it's a critical one. And for investors, the stock price has seen some wild swings. From the start of 2025 to the end of the year, the stock price bounced between about $18 and $55. This volatility is typical for biotech stocks, but it means investing in them is definitely a high-stakes game. They also mentioned a recent class action lawsuit settlement related to stock trading, which highlights the kind of legal headaches these companies can face. They also have to maintain strong internal controls as a public company. This is about making sure their financial reporting is accurate. They reported that as of the 31st of December 2025, their internal controls were effective, which is good news. But they also acknowledged that building and maintaining these can be a real challenge and future weaknesses are a risk. Finding and keeping good people is crucial, and they face stiff competition. Biotech is a talent war, and losing key people could really set them back. Looking at their strategy, they aim to develop disease-modifying medicines, establish clear paths to successful products, and build a leading biotech company. They've in-licensed their key drug candidates, which seems like a smart way to leverage others' work. Their immediate goal is to get Accession approved for Egan, build the team for a potential launch, and explore other uses for their drugs. So, what is the big takeaway here? Vera Therapeutics is in a high-risk, high-reward business. They're spending a lot of money to develop potential life-changing drugs, and that is reflected in their significant net loss. The financial tables show a dramatic increase in both research and development, as well as general and administrative expenses in 2025. Signaling major investments into future growth, particularly around the potential approval and launch of Accession for Egan. Their cash reserves are substantial, but the clock is always ticking. The risks are plentiful, from clinical trial failures to regulatory hurdles and intense competition. In short, Vera Therapeutics is a company betting big on its pipeline. The numbers show a company aggressively investing in its future, but the path to profitability is still long and uncertain. It all hinges on the success of Accession. Now, looking at these numbers more broadly, Vera Therapeutics is clearly in the high-stakes game of drug development. Their strategy of focusing on a few promising candidates and leveraging external expertise is common in the industry. The significant increase in R&D spending is expected given their late-stage trial, but the huge leap in general and administrative costs also suggest they are gearing up for commercialization, which is a massive undertaking. While their cash position is strong for now, the continuous burn rate means future fundraising will be crucial. Their success is deeply tied to regulatory approvals and market adoption, which are always significant unknowns. What is your take on Vera Therapeutics' latest financial report and their go-forward strategy? Do you think they can pull off a successful drug launch, or are these losses a sign of trouble ahead? Drop your thoughts in the comments below. If this deep dive into their filing was valuable, hitting that like button really helps us out, and subscribe for more corporate decoder content. Don't forget to join our Discord community for even more insights. Thanks for watching, and we'll see you next time.